Good morning. Welcome to trading day. What day? what day was it yesterday? Yes, oh, of course. Friday, the 22nd of May, 2020.
Beautiful day.
It was a beautiful day for some people, but not for me, and I think not for you. Oh, I think I did some of the stupidest moves I've made since SPY was going down. And I find it really hilarious what I did. And I think I go first today, so I get to tell you what I did.
Yes,
Um,
please.
I think I will be very lucky if I'm above 800.
Weren't you 800 yesterday? 800 something.
Oh, sorry. Then you might be right. Then I will think it's very lucky if I'm above 650.
Oh, okay. Uh, let's
Let's
see.
let's take a look and see. Uh, there's this
Yeah.
term, catching falling knives, and I tried
Huh?
to do that yesterday, and I
I'll
think
wait to hear
I think the knife
the.
has cut me, and now I'm very red. So my entire value, not great, not horrible, 717.
770.
717,
Uh,
717. I am down $142, 16%. Let me send you this.
okay.
Uh, but actually, I had an opportunity yesterday to make it not bad at all, and I didn't take it.
Huh.
And in fact, I canceled my limit order, which is so
So you're
stupid.
more pissed about a bad move yesterday.
Yeah, I am quite upset. Actually, it was a really good learning experience, and I'll walk you through what I did and why I did it. So you can see in my main screen down to 717, and you can see during the middle of the day how I like dropped way down in the beginning of the day, and then I bumped back up, and I actually thought about selling as I was doing this bump back up, and then I canceled my limit orders so that I could lose again on the end of the day. I want to make sure that I locked in my losses. But
Right.
if you look at my history of trades, what I did in the very morning is try to catch these falling knives, which is Foot
So,
Locker.
so just start from bottom up. So
Bottom
the
up.
first thing you did, FL26 put.
Yeah, so pre-market, I actually put these in as limit orders pre-market, like trying to gauge the right price and hoping they got filled. And as soon as the market opened, they got filled, and that's kind of when I realized I probably made a mistake because I
What
didn't.
is F
Foot Locker.
Foot Locker?
So
Okay.
Foot Locker had earnings yesterday,
Yeah.
and super abysmal. Like the predictions and actual were off by like 400%,
Oh,
something like that. Like, like they were really negative. Analysts were thinking they would be a tiny bit negative, like squeak through, but they were like, instead of being like 17 cents negative, they were like over $1 something negative, so like hundreds of percent worse.
yeah.
That's the headline, of course, but then the result was I saw that headline coming out. I saw pre-market they were down 6%, and I'm like, I think they're going to fall even more. I'm going to try to buy these puts. So I put in these limit orders for puts early in the morning because I figured I could catch a little bit of the downward movement as people like got the news and woke up and sold, like the more casual investors. Um, but I think I put the limits in for a little bit too expensive. I tried to gauge how expensive it should be for these, and then kind of gauge how much I thought the stock would drop. And I thought the stock would drop from 29, where it was yesterday closing. I thought it would drop down to like 24, 23. And it didn't end up doing that. So it dropped down and then bounced back up to 27. Uh,
Okay.
but I don't understand it. Actually, if you just look at a little bit of the history, I'm looking at the day charts of the last few days, and let me zoom in and I'll tell you what I mean, why I don't understand it. So just as an example, leading up to earnings, they were down at the $23 mark at the beginning of May.
Okay.
And then earnings is coming out, and even actually in the 14th of May, they were around 23 to 22 on the worst day. And then they're going up with earnings coming very soon. And so I was like, okay, they must come back down to like the $23 range, because the run up in price is only the earnings really. And no, they ended up closing the day almost at 27, which is still down somewhat a significant amount, but I'm very surprised that it didn't drop more. And so I bought these puts on the way down-ish, but really it ended up being the bottom of the way down, and then they bounced back up. So I lost a bit there.
But you made money. But you made some money on it.
No, so I bought them for $50 and $80. And if we look at the
30
price now, they're $30, actually an 88. So I made money on the one. Wow, okay. So that one's not that bad.
30 cents and 88 cents. That's what I'm seeing.
And I bought them for 50 cents and 80 cents. Wow, okay, so it's not as bad as I thought. I thought I lost at least $100 on this trade yesterday. I thought they went down a lot. I didn't look at the prices. You're right. I just lost money on everything else.
Okay. So you bought 2 Foot Locker puts and what else? Pending, you have.
And then I tried to sell things. You can see that I then put in my limit orders on Foot Locker, and then I canceled them because I saw that it bounced back up, and then it looked like it was going down, and I could make some money. Actually, at some point yesterday, I could have sold both of these for a very healthy profit, like 60% up. And I was like, no, it's going to go down to 24, 23. Like, I should be getting like hundreds of dollars from these, not just a little bit. So I got really greedy, and that caused me to lose just a little bit. But
Well, they expired, so you're okay.
Yeah, I'm okay on that side. Yeah, this 30-cent put that I had, the maximum price yesterday was 80 cents.
Sweet.
That would have been amazing, but I didn't sell. And this 80-cent put, the maximum price was $1.38, and I saw it close to this level, and that's when I canceled, because I'm like, it's just going to keep going. I'll sell it on Tuesday or whatever. But that was stupid. I actually should have taken my gains right then and there, and should have learned from that, because really this was a day trade move, and I should have thought of it that way. Like, I think next week it'll either go really green, in which case I will lose, or it'll go really red, in which case I will still lose, because of, like, I'm hedged both ways now. So I really hope Foot Locker does go down next week based upon their earnings that they had, but we'll see. Anyway, that's all I did. I was all over the place. I was really flustered last night. Like,
stock market related?
Yeah. Just
Yeah.
with this Foot Locker thing, I'm like, I had a lot of self-doubt. Like, did I do the right thing? I bought this thing. Like, it shouldn't have got fulfilled so easily. Like, why did I put the limit so high? You know what I mean?
Yeah, I freak out when the order gets immediately filled. It's like, what?
Yeah.
What? Wait, Yeah.
And I actually think, so yesterday, this $25 put that I paid 30 cents for was $0. A $0 value yesterday. And so I was trying to gauge what it would get filled at. But I was kind of expecting neither of these to maybe get filled. And I'm wondering if I could, as I saw the pre-market moves and saw that the news was coming out, I wonder if I could have bought this for 10 cents instead of 30 cents by putting in the order at market open to get executed immediately, because someone out there probably has their order, like, to sell that for at any cost kind of thing.
Yeah.
And so I wonder if I had tried to underbid this much more, if I still would have got it, and then it would have been worth some cash today. So Anyway, it got filled, and I guess I haven't lost as much as I thought, so it's not too bad. Overall, I think I lost $12 so far on these Foot Locker puts.
Yeah.
Wow.
Okay.
I thought it was much worse.
Disaster averted. Yeah, not so bad.
Disaster averted until next week when these all go to zero. We'll see. I'll try and sell them ASAP.
Yeah.
Okay, so other than that exciting Foot Locker bit, I didn't do much, and I'm not planning to do much until Tuesday, which I'll be forced to make a whole bunch of moves on Tuesday because of my expirations that week. So that's it. Over to you. It was also a hurtful day, or it felt like not a great day.
Yeah, it was a very interesting day. Okay, so predictions. I believe I was just hovering over 7 yesterday. Let me just check the image that I made. 7186. I think that I'll still be above 7. Fingers crossed. I think I'll be above 7. But it was very interesting what happened this night.
Were you excited? Were you excited with SPY being down early yesterday?
No, I don't. Honestly, I don't look at my SPY put all that much because it's just like it's there.
Yeah.
If it activates, that I know that the rest of my portfolio is decimated. It's sort of like I wrote away $900, just like keep it there for a rainy day.
Right.
So let's open it up and let's see. Prediction is just over 7.
Okay.
It's taking a while to connect. It's not connecting. Let me log in again. Come on, connect. It's under maintenance or something right now. I cannot get it to load anything. Okay. Well, I sent you the screenshots. Let's analyze what happened. I lost about 6.5% of my net worth yesterday. I went from 7186 the previous day down to 6720. I think yesterday was just a pretty rough day for a bunch of my positions.
Yeah.
So you can see, the usual ConocoPhillips is just one of these calls that I bought a while ago. I'm fine. I think it's actually quite volatile, so it moves around quite a bit. I'm definitely gonna try to get rid of it this coming week. June 5th is next week. Cool. I still have 14 days. So yeah, that's fine. The big story here is you no longer see JD from my portfolio. And you see something called PDD. Ping Do Do.
Are you happy?
I love it. I'm very happy.
So you exchanged a declining position for another declining position.
Yes. I would love to do a video where I talk about how to survive horribly timed moves. I did that with Zoom, and then I did that with Space, and then I've just done that with PDD. So I described it earlier, but if we just scroll to the third screenshot that I sent over, you can see that I sold 2 JD calls. I sold the first one for 2.54, the second one for 2.49. My average cost was what a bugger. I mean, I was up at 6. Ridiculous.
I know.
Anyway, my cost for it was 1.3. So okay, almost like 2x. That's respectable. Could have been a lot more. And then I immediately, as I said, I couldn't sit on cash. Just couldn't. I don't know. Had no patience at all. So I immediately transferred it all into PDD, which was skyrocketing. Basically, what my thought process was, Chinese stocks are going to suffer, and let me find a Chinese stock that is doing very well right now.
Yeah.
And so I came across PDD, which when I first glanced at it at about 9:50 p.m., 9:50 a.m., it was up 1%. And then it went up 2%. And I tried to buy puts at that point, but I lowballed it and it didn't work out. Thank goodness. And after about 20 minutes of staring at it, it had gone up to 10%. And that's when I finally managed to get a put at the price I wanted. And again, right, it was, the share price was 60. I was trying to buy a put at 56.
Right.
And then what did it end up at yesterday? It ended at 69.
Yeah, it went up like 14-15% yesterday.
Yeah, madness. I mean, just love it. I just absolutely love it. So,
do you think it will drop down precipitously next week? Do you think it will suffer like a big drop?
I no longer trust. I'm just I think I no longer have any faith in what really happens on like a day-to-day thing. I think, again, stocks always go up. You know that. That's law. And in the short term, I think there could be more scares. I think I was very scared on Friday with all the rhetoric about the China-US rhetoric, and I would be terrified holding on to Chinese stocks right now, playing this game. So I'm glad I have positions against it, and yes, I very much hope it crashes this coming week. But in order for that to happen, the spotlight needs to remain on US China. It cannot get out of the spotlight. So I hope there's more attention to the issue this week.
Yeah, there needs to be a lot of tension between the US and China, and that should affect the stock price for these big Chinese companies operating in the US. Yeah. Okay. I hope for your sake the macro environment is unfriendly.
Yeah. But overall, very happy. The one bright spot in my portfolio yesterday is space. Yeah, I've almost recovered my it had a really, really nice jump yesterday. So my cost for space is 238, and yesterday it jumped back up to 2.21. So that is a very friendly jump from space. Yeah, that's it for me. Zoom didn't really do much, and I flirted with the 8,000, came very close to breaking 8,000 this week. That's my goal this week. I do think that I believe I have the right options to push me over the next 1 to 2 weeks. Yeah.
It'll be a very interesting couple of weeks then for us.
Yeah, we're entering the final stretch, right? We're already halfway done with this competition.
Yeah, that's incredible. Well, I would like to get to at least half of my initial buy-in, and then I would love to get to half of the eventual goal.
So I'm curious, having had limited success so far with this type of like naked option gambling, with the gambling that we've been doing, how do you feel? Like, do you feel that you don't want to play this anymore, or do you still get really excited by the prospect of ridiculous games?
No, I'm still very excited. But I think I made this analogy before, which is like playing poker when you first start playing, or playing blackjack when you first start playing. You don't know what you're doing, and you make ridiculous bets. And I remember the first times that I played Texas Limit Hold'em, like Texas Hold'em poker, and I made so many mistakes, and a couple times like I won so big, and a couple times, most of the time, I just got destroyed. And eventually I looked back on my beginner self in poker, and I was like, wow, I was making some ridiculous moves. I'd be like, ooh, I have pocket sixes all in. And that's what I'm doing right now in the stock market. That's what I feel. And as I start to learn the strategies, learn what things are, I'm looking back even now and thinking, how did I make a bet like that? Like, and then hold on to it. Like, how did I do a 200 SPY put, and then with only like 1 week to go, right? And then hold on to it for like the entire week.
Yeah.
And then just let it expire worthless because
Yeah.
I didn't know how to play the game. So I feel like I'm getting to the point where I can play the game reasonably well, not yet profitably, but at least I'm not suffering those same losses as I used to. Like, yeah, okay, I'll have like a 20% down day, but I won't have to the point where I'm getting down to 0 anymore. So finally, I'm at least getting it through my very thick skull how to play some of the rules a little bit better. And eventually, I think I'll get good enough to make some money in the long term. That's where I'm hoping to get to. Obviously, I want to be a little bit more conservative with the rest of my portfolio and play strategies that have super high probabilities of returning cash and money over the long term. But option trading is, like naked option trading, is really just gambling, and that's the fun of it. I'm very happy to play it, and I'm very happy to play it with very cordoned off limited funds. So,
Oh yeah, man. Agree. Cool.
are you
Oh,
enjoying
that's
it
all
as well?
for. Huh?
You're
Sorry?
enjoying it this way as well?
I love this. I love this game so much. Yeah, I just love it. I think it's so interesting. Like I guess what's so exciting about this is like, was buying like $1,000 worth of space calls 3 days ago the wrong move? It could have been such a good move. You just have no idea. You
Yeah.
really have no idea,
Yeah.
right? Like long term, it's the right move. Everything goes up. So I've started to take a more sort of. I'm trying to take a more not hands off, but a bit of like a bit of the mindset that I am just making moves to get lucky, like to position myself to hopefully get lucky.
Yeah.
Do you know what I mean? I may, it may dip, but it may also blow up, and just sort of like trying to dispassionately allocate my portfolio of options so that there are some really decent returns when that day hits. So that's really how I'm thinking about it now. Hope you guys enjoyed today's episode. Hope you have a good weekend. Z and I will be talking about Monday in 2-3 days time. We're gonna take a nice little break from the market over the weekend. I'm gonna play some poker. What are you gonna do?
I'm going to do a regression analysis on covered calls.
That sounds really. I'm so excited for you to do that.
I'm excited to do it. It doesn't sound exciting, but I'm really, really curious. It's like burning up. Like I want to know what it's like. So I want to make sure that I'm.
If you kept doing it, like whether you would beat just holding the stock, right?
Yeah, exactly.
And are you gonna do something where it's like, if like an assumption is like, if I always like sold calls 10% above strike price or 20% strike price, like what would that look like?
Yeah, my methodology is I'm going to try to figure out the volatility, approximate volatility. I mean, I will be able to know actual volatility, right? Because I know how much the stock moved. And I'm going to assume that implied volatility was somewhat close to actual volatility, though oftentimes they can differ a bit. And then I'm going to set a strike price on the option based upon the volatility index, and then see if I can beat the just holding on to a stock based upon entering in certain trades based upon volatility. Yeah.
And just so I remember, I know we've gone through this many times. I know the wheel now, but a covered call is basically selling calls, right? When you have 100 of the shares, that's all it is.
You sell a call when you have 100 shares, and you become the market maker for those calls.
Okay.
The hope, of course, that it's somewhat a bearish strategy in a way, which is you hope that the stock doesn't rise too much to cause you to sell the stock.
Yeah.
But at the same time, it's also very optimistic, because if you do sell the stock, well, it's at the price that you predefined, which is why you're selling the call at that price. So the downside of it is, oh, I didn't make as much as I could have potentially.
Mm-hmm.
I'm okay with that. As
Yeah.
long as in the long term, it really does make sense. And 60% of the time, at least, you're beating what the market is doing or what just holding the stock is doing. Then I think that this is a potential strategy to gain a couple or even maybe 10% more out of the market per year than you would have otherwise. And if that's the case, what a phenomenal way to do option trading and to hold on to stock. All right. Well, see you on Wednesday.
Whoa.
I know. Yeah, we have a nice 3-day weekend ahead of us. So let's enjoy, figure out some strategies, and come back to us beating the market.
Yes. All right.